In this video, I'll be explaining how variable rate mortgages work and how fluctuations to the rate can impact your mortgage payment. Welcome back, guys. It's Tom here from Moffat Mortgages. Thanks again for tuning in, and as always, please feel free to like the video down below as well as subscribe to the channel. Hit that bell icon for notifications. That way you don't miss out on videos like this in the future. So how do variable rate mortgages work? The variable rate fluctuates as the prime rate changes, whereas the fixed rate is a set fixed rate for the entirety of the term that you signed on for. A variable rate is displayed as prime plus or minus a certain amount. So to give you an example, let's use today's prime rate at 2.45%, and let's say you lock in with a lender with a discount of 0.45%. So essentially you are taking that prime rate of 2.45% and discounting 0.45% from that, which gives you a net rate of 2%. Now it's important to note that although variable rate mortgages do fluctuate, the discount on that variable rate that you initially signed up for does not fluctuate. What fluctuates is the prime rate. So going back to that example, the prime rate at 2.45% is what is actually fluctuating during the year, whereas the discount of 0.45% will always remain during the entirety of the term. Okay, so now you're asking, what is this prime rate? So each bank and lender set their own prime rate, but it's heavily influenced by the Bank of Canada's overnight rate, also known as their policy interest rate. So typically speaking, when the Bank of Canada increases their overnight rate, banks will follow suit. And the reason for that is because when the overnight rate does increase, it becomes more expensive for banks to borrow money, so they increase their prime rate to cover those costs. Now conversely, when the Bank of Canada decreases their overnight rate, banks and lenders will also follow suit and decrease their prime rate as well. So as the prime rate increases or decreases, so does your variable rate. Now because of this, variable rates are often given at a discount compared to their counterpart, the fixed rate. Now consumers don't really realize when they lock into a fixed rate, they're essentially paying a premium right off the bat. Now depending on the lender, if you did get a variable rate mortgage and you have a fear of the prime rate rising over the next year or two, well, you can actually lock into a fixed rate at any time during the term of your mortgage. However, you are locking into whatever the fixed rate is at that time. So now that we have the basics covered, let's dive into how this is going to affect your monthly mortgage payment if prime rate were to ever rise or lower. So let's use an example of a $500,000 mortgage. Let's say we're using today's prime rate at 2.45%. That monthly mortgage payment is going to be $1,986.94. So let's say the prime rate increased by 0.25%, which gives you a prime rate of 2.7%. That's going to increase your monthly mortgage payment to $2,045.58, which in turn gives us an increase of $58.64 monthly. So as you can see, it's not a huge difference when prime rate does increase. Where consumers have the issue is if prime rate is continually increasing throughout the year, then you can see a significant change in your monthly mortgage payment. But typically speaking, you do have somewhat of a warning when it comes to the Bank of Canada increasing their overnight rate. Okay, so now you're asking, how often does prime rate change? So no matter who you are, you're not going to be able to figure out what the Bank of Canada is going to be doing over the next year or two in terms of changing that overnight rate. However, what we do know is that the Bank of Canada meets 8 times a year to determine whether they are changing that overnight rate. So you can expect up to a maximum of 8 changes to your prime rate. Also, when prime rate does fluctuate, it's usually by 0.25% increments. Now, there's also many pros as to why you might want to go with the variable rate mortgage. If you have worked with me in the past, you do know that I am a big fan of variable rate mortgages. However, with that being said, it doesn't mean that it's going to be the right rate for you. So if you're still undecided as to whether you'd like to go a fixed or a variable rate mortgage, well, reach out to a professional who can actually help you lay out all the cards, display the pros and cons of each rate, and help you make that decision. As always, please feel free to reach out to me. I love talking about this stuff, and I'd be happy to help you make that decision. So that concludes today's video. I hope you guys enjoyed it, and as always, I'll see you guys on the next one.